Hello everyone. It gets interesting and more interesting, I should say, every day in the stock market. The S&P 500 rallied 0.79% today on above average volume, putting it inches away from all-time highs. Once again, I will repeat, if that happens, we go into buy mode. However, I will not be. I do not like what I see here. Even after today's gains, it seems like it was just pump the tape today, as it seems like 90% of all the stocks in the stock market were up today. I did not look at the advanced decliners yet. I am going to check that out later on. But it just seems like everything that in all my long scans or my scans where it has top stocks, 90% of things went up. So that's a little ridiculous. On top of that, auto parts makers, aerospace and defense industry, and utilities, and now closed end funds absolutely dominated my scan today. Once again, this is not a sector or sectors that you see lead in really strong rallies. So to go along with the S&P 500 coming close to a new high, the New York Stock Exchange is actually closing at a new high. So technically, we have a buy signal triggered here on the New York Stock Exchange. But once again, I want to show you this monthly bar chart. Look at the volume readings. Look at the volume readings as we go to new highs over the past 5 years in this market. Each and every year, volume declines and declines and declines. One of the most bifurcated markets there are no markets that you can see like this. There's nothing like this. And if you think stocks are safe up here compared to what they were, it's just absolutely insane to me. The price to earnings ratio, forward looking, current price to book ratio, price to sales ratios, they're all at the most expensive that they've ever been. 2000, 2007 highs. And then you have, of course, the Investors Intelligence Survey that's got bears at all time lows. 1987 is the only other time you had less bears. So it's just a pretty crazy market. Not a market I want to buy, despite what the New York Stock Exchange is doing. Now, the Russell 2000 retook the 50-day moving average today, but it is still below the most recent highs of 1184, the open of the 26. So I'm not too worried until I see it close over there. Then I have to think that, damn it, we're going to try another leg higher. But I don't know what we're going to lead us because, like I said, it was all auto parts, utilities, aerospace and defense. The only weird thing is that IPOs, I had so many stocks today in the IPO market that triggered heavy volume moves. So it's just a little crazy to see all this happening. GLY, it makes me wonder what the hell's going on, and I really don't know what to think. ARGS, you can just look at all these volume surges, and I'm just like, why the hell? If the market is so weak, would these be seeing accumulation? So we'll cross that bridge if we can break out on these stocks, but maybe we are trying to find a low. The only good breakout I could see overall was ALIM, and it was up almost 10%. It's not necessarily a stock I want to buy, but man, it does look strong. Hope it works out for those that decide to go long. I'm going to go ahead and pass just because I don't know. I'm going to probably regret it, to be quite honest with you. I'll probably regret not going along this stock, but it's just up too much in this kind of market, up 9%. And to go along with that, the NASDAQ is still trending below the 50-day moving average, keeping it under a sell signal. You can see volume was well below average again today. And on the QQQ, you can see it was even a worse day for it, up only 0.71%. And it actually closed below where it opened, so it couldn't even hold its gap open. So it's kind of a mixed market right now, but it's not that positive. We do have some sells tonight. Lock is closing below the 50-day moving average on above average volume again. That's another 25% sell. It's only 25% this time just because the 200-day moving average is so close, so we don't have far to go to know that we're completely wrong. OCIR, another close below the 20-day moving average. The huge intraday reversal means that it's not a full sell yet, though. Closed below the 50-day moving average, and we are completely out of OCIR. Not going to wait before a final close below the lower day of the signal date. And then SRTY, byproduct of the Russell 2000 closing above the 50-day moving average. We're going to go ahead and take 25% off of that. We're completely fine in our SQQQ position as the QQQ remains under the 50-day moving average. And looking at the IWM, you can still see that it looks pretty ugly overall. So if it retakes the 50-day moving average to the downside, we'll go ahead and increase our short position another 5%er again. And like I said, each day that we end down near the low of day, I'm increasing my short positions. This market has something wrong with it. I mean, I'm going to go back to what the stocks that were the best today. UTX, LLL, S&P, FSS, EIX, AVA. You're starting to get the picture. It's just a lot of defensive industry names. So, until I see that change, I'm not going to really think that we're going to rip roar higher here. If we do hit new highs, it wouldn't surprise me if we just then reverse it right back into a consolidating or a chop pattern. So be careful out there, everybody. Cash is king. I think right now I'm right around 40% cash, 30% long, 30% short, might be 35% long, 25% short, but we're right around those characters. I know for a fact I'm 40% in cash as of now because I just went to go execute the one new long order that we have, and that's in corn fund. So corn is breaking out above the 200-day moving average. I'm going to use the ETFs as I don't like to use futures just yet, maybe as I get older, but now I just want to stick with the ETFs. So corn's breaking above the 200-day moving average. First cut loss closed below the 200-day moving average. Next cut loss is a close below this low a day, 32.98.